For TraderInsight.com, I'm Adrian Manz, and it's time for your daily dose of the doctor. Let's take a look at using the trading plan and how to think outside the box a little bit. So, first off, whether you're putting together your own plan or you're following my trading plan or anyone else's for that matter, what you need to keep in mind is that just because something didn't trigger today does not mean that it's not going to make for a great setup tomorrow or the next day. So we like to call these extra innings, and we keep them on deck for the whole trading week, basically, and just try to see if something that we thought was going to follow through winds up following through. And here you're looking at the plan for March 31st, and we see that we had Charles River Labs, CRL, we had LDOS on the plan, and we had UA, so Under Armour was also on the plan. And let's zoom in on these parameters on these things and just see what it was that we were looking for. Here we have it on March 31st. I had a switch hitter short setup in Charles River Labs, ticker symbol CRL, and I was looking to enter that short position at $79.18. My stop was up at $79.82, and my initial target $78.46. And 50% of the distance to the target was $78.82. Once I would hit that level, that's where I would move my stop loss to break even. So let's take a look at what happened when this one actually went into the trading day on March 31st. And here we have it. The best trade plans of mice and men, right? There is no trigger for our CRL position. So we spent a lot of time planning it. We definitely thought it was going to make a move down lower, get in to catch some of this support down here, and lo and behold, on March 31st, absolutely nothing happens. No trigger. So now you have two choices. You can toss this one aside and say, well, better luck next time. If I see another pattern form, I'll have another look at it. Or keep it on your radar for the following day and see what's going to happen. 78.46 had been our profit target on that position, and lo and behold, went right down, hit it, got down even lower, reversed over the course of the session, but no matter what, keeping this one on the radar managed to get you profitable on a trade you had planned to do anyways that just didn't happen to follow through on the day that you thought it was going to follow through. That doesn't mean you stop watching the stock. How about that planned trade in LDOS? Well, we see here, this is what I call a 3-2 pitch setup. It's also on the short side of the market. 41.93 is my short sale trigger, 42.15 was my stop, 41.61 the initial target, and if it gets down to 41.77, I'm going to move my stop to break even, and if it gets back to that entry price, I'm out of the trade with zero, but at least it was risk-free. Here's the trade day. LDOS opens low, trades down a little bit lower, gets down to where? Exactly to my 50% to profit level, turns around, reverses back up into the entry price, and stops me out for a big goose egg, right? It's a zero for the session. I can either be aggravated by this or keep it on the radar for the following day. Well, surprise, surprise, take a look at what happened with this one. LDOS opened right up inside yesterday's trading range and moved down, plowed right through our profit target, kept on going, before reversing and taking you out with a money management profit protecting stop. And look, it closed up in the range right up around where it wanted to aggregate yesterday. Have a look at Under Armour. Infield fly, short side setup. That's basically a little doji or a shooting star or whatever you candlestick guys call them. I call them infield flies. It's a short at $79.75. I've got a stop at $80.11. The initial target, $79.25 and $79.50. I'm going to go move my stop to break even. Let's take a look at what happened on the trade day. Well, how wrong could I be? Instead of moving down underneath that infield fly setup, it went and moved higher, but look what it left. Another infield fly setup. So if you stay frosty and you're looking at this, you're going to say, you know what? If it moves below this low tomorrow, I'm going to go ahead and plan to take this trade anyways, and I'm going to use the same target. I'm going to have everything set up exactly the way that I did. And if those March 31st levels from the trading plan happen to come to fruition, I'm going to do one of two things. I'll either take it off at the profit target, or I'll see if I can get a profit target that extends even further based on some kind of a volatile move. And look at that. 3 in a row. That's what they call a hat trick, right? We have got a big move. Starts right up at the low of the inside day bar of the bar that came on the heels of this one that we really thought was going to make the move lower. You could take the entry off this low. You could take the entry off the planned low. One way or another, boom, straight shot to the profit target. Now, why'd we do this little exercise? I want everybody to start thinking outside the box a little bit when it comes to making their trades. So whether you're trading my plan or you're looking at some of the stuff that we're doing in the trading room, Rick calls a trade, it doesn't go off right away, whatever the case may be, just because something doesn't happen the second you think it's going to happen doesn't mean that you should take all the work you did in planning it and put it aside. A lot of these trades wind up working themselves out later, 1 day, 2 days, even 3 days out. And if you can learn to wait to capitalize on those opportunities, if you can learn to just anticipate what may be coming next, you've got the opportunity to get in front of those trades and capture some really significant profits. If you have any questions, shoot me an email, adrian@traderinsight.com. The best trader education anywhere, only from Trader Insight.